Welcome back to Global Money Talk live from the New York Stock Exchange. Demand for data centers is rising as more companies invest in artificial intelligence and digital services. Now, the global market revenue for data centers is expected to reach a triple-digit billion-dollar sum this year. New data centers for AI processing are different from those built a few years ago, requiring new skills as well as materials. Now, as microchip technology advances, the need for power and cooling grows, affecting the design of new facilities, and strategies to manage power demands as well as incorporating flexible cooling, all integral for both new and updated data centers. Today I'm joined by Larry Raiman, CIO at LDR Capital Management. Larry, thank you so much for joining me today.
So nice to see you again.
Well, welcome back. So I do want to start the conversation by asking you a very basic question. So what exactly is a data center?
By all means. So by the way, thank you for having me back on. It's always nice to see you. Let's paint a picture of a data center. If you visualize an industrial building, that it is a big box, maybe 30 feet high, 1 or 2 football fields in footprint, that's the box of a data center. But that's where the data center and industrial building diverge. A data center, to get into one, you probably have 2 or 3 security protocols. You'll probably have human checkpoint, you'll probably have biorhythmic checkpoint, maybe even laser footprint on the floors. Once you're into this big industrial building, you'll go into the building and you'll see 2 football fields of racks. Customized racks, standardized racks, from floor to ceiling, rack after rack after rack after rack. And on these racks are computer servers. Thousands of them, tens of thousands of them, maybe even as many as 100,000 servers that you will see all in a row. Then, when you walk inside the racks, you're going to feel a lot of heat because these computer servers are generating power, and that's creating heat. So, surrounding the circumference of the data center is very precise air conditioning and cooling systems to keep the box cool. Otherwise, the heat generated by these servers would be just too great. Then if you looked up in the data center, you would see power cords, massive power cords, running all through the ceiling of the data center, feeding power into each of the racks all the way down into each of the servers. And then surrounding all of this infrastructure will be computers. You'll have computers monitoring the data distribution to each rack, to each server, the precise climate control, and the security protocols and everything. And also the greenhouse emissions, because each of these data centers seek to be carbon neutral. So a very sophisticated box that has extremely high finish, all feeding off one major source, and that's power. And that's driving the life that we live today and the increased data usage that's required.
And Larry, I think you painted such a great picture in terms of what a data center is. And in terms of infrastructure as well as the need for 24/7 maintenance as well as security, you're speaking about a lot of consumption here when we're talking about energy. So give us an idea of what types of data centers are out there.
So there's generally 3 types of data centers when we think about the structure. The first would be what's called a hyperscale, which is one big data center occupied by one massive user. Google, as an example, has its own data centers. They'll have 50, 100,000 servers within their data center. They completely occupy it. They have their own security protocols, their particular climate controls, and everything they need within that single tenanted center. A second would be what's called a co-location center, and that is individual discrete users, kind of like a multi-tenanted office building, all occupying the center with their own rack or with their own server, all indiscriminate, safe, secure, with protocols that provide firewalls amongst each of them. Then there's something called network dense, which is the most unique. There's only 1 or 2 in each location, and that would be a multi-tenanted, co-located property, but instead of having discrete firewalls that separate each of the users, they are working together. And these are big cloud providers and ISP or internet service providers working together, communicating within one center because they want proximity, they want speed of communicating among their systems and within their systems right away. So there's maybe one or two of these network-dense systems within each market. And those are the primary three products in the marketplace today.
And Larry, I understand that you have been to data centers before, so give us an idea of what the market looks like, not just in the US, but based on region as well.
Sure. So when you think about the marketplace, there's tens of thousands of data centers globally. About half of the market is here in the United States, and about half is in non-US markets. There's principally located in major metro markets in the United States. You've got the New York metro area. DC is the largest market in the United States. Then you've got Atlanta, you've got Chicago, and then of course you've got Dallas in Texas, and then of course you've got Portland and Silicon Valley and San Diego. Outside of the US, in Asia, you've got Seoul, South Korea's got a very big data center footprint that's growing, doubling in the next few years. Hong Kong, Singapore, Sydney, in Western Europe, the major markets are what you think of as Dublin, London, Paris, Frankfurt. So it is a broad footprint, global, and it is growing by leaps and bounds. There's voracious demand. We can certainly talk about it. The market's supposed to be growing by a good 2x in the next several years.
And in terms of the tenants that occupy or utilize the services of these data centers, we're here at the New York Stock Exchange, and just by looking around, we know that there's a lot of data moving across all the screens behind us and underneath us.
Oh.
So tell us about the types of tenants that use data centers.
Sure, it spans the spectrum. From the largest cloud service providers to ISP providers that demand so much capacity. It goes to large retailers such as Walmart or Costco that have such power demands and storage demands. And it spans all the way down to the New York Stock Exchange, which is a big consumer of power, but also broadband and also storage. And then it works all the way through individual users, such as a small financial firm that wants data backup on a data center as a redundancy to cloud backup. So, and then also power usage. So the usage of data centers, our firm stores one server in a data center just outside of New York City as a backup to our cloud storage. So it goes from small regulated firms all the way through big cloud providers. And the demand across that entire spectrum continues to grow.
And a key word you keep on mentioning, Larry, is demand. So with that demand comes the need for energy. And when we think about some of the big tech names that have been driving the gains in the AI sector, we know that they're concerned about sustainability as well. So what does the reality look like here?
So the reality is we need a lot of data centers. The demand is growing like crazy. The reality is that one industry participant said that the amount of data centers in the country today, in the United States and across the globe, only is enough to meet current demand. There's not enough supply to meet future demand, which is growing like gangbusters. So the dynamic is that the demand is growing so voraciously, and we can certainly talk about the drivers to that. There's pockets of supply that are continuing to grow very quickly, but there's also some impediments to supply as well, depending upon access to power. Sometimes there's a NIMBY, not in my backyard mentality. No one wants to look in their backyard and see a data center. So there are really strong requirements for continued growth to meet our life and our demand for storage and data delivery and everything. And there's also some supply constraints as well. So the reality is it's a growing industry, but the growth will be in certain pockets.
And before I move away from this, I do want to ask you about some of the headlines we've been seeing, the need for more energy by big organizations, big names, whether we're talking about Google or Microsoft or some of the other tech names. So how can they meet their goals in terms of sustainability with this huge need for energy?
It's a difficult challenge. You see, Microsoft is now leasing a formerly defunct nuclear power plant in Harrisburg, Pennsylvania, in 3 Mile Island. So the need for energy is voracious, and as it pertains to data centers, the major impediment to build a new data center is access to power. And there has to be a sustained 24/7, 365 utilization of power to be delivered to the tenant. Otherwise, you can't have a data center. So we are constantly looking for more and more power to fund our constant demand for storage and also broadband and usage. So it's a big challenge ahead, and we'll meet it.
And this will be an area to keep our eyes on.
Yes.
And while we're looking at this, in terms of the tech companies, so last week Google announced its first U.S. deal to support the commercial construction of small modular nuclear reactors. And this technology does aim to avoid some of the challenges of building large nuclear power plants. And under this deal, apparently, Google will back about 7 reactors to be built by nuclear startup provider Kairos Powers. And this speaks to what's happening because there's a lot of competition growing and also sustainability concerns when it comes to demand. So what do you think this means for energy and as the need for energy rises?
It means we are in a constant search for more energy. When I think about the data center side of it, and you think about the usefulness, if you did a Google search and you did a ChatGPT search, the ChatGPT search would be 10 times the power required. And think about the the AI uses going forward in our society. There's going to be a voracious need for power to drive this this growth in AI. When you think about 5G, if the advent of 5G relative to 4G requires 2 to 2.5 times the power. So between the AI growth and between the growth of 5G to 4G to 5G and then 6 and 7G down the road, we're going to have a constant need for power. And then, of course, sustainability power and green energy. So we have a long way to go to meet these power needs for sure. We're nowhere near there now. And we see it from the data center side, and that is there's a huge demand. There's going to be a doubling of data centers in the next 5 years. We need power for that.
And so based on our previous conversation we had on real estate, we mentioned data centers, but another term that you just mentioned earlier today is NIMBY. So what does this look like in terms of data centers and real estate?
Well, there's certainly some barriers to supply growth within the data center marketplace. So the 2 barriers to supply growth within the data center space are access to a power source, of course, and then this NIMBY dynamic where communities don't want growth because of the power generation and the protocols to run a data center in a community. So there are certain markets that have said no more data centers for now. And other markets like Phoenix are growing very aggressively. So this NIMBY dynamic where people don't want a power source of such generation and a data center of such usage right in their backyard will be a strategic impediment to growth of supply in the marketplace for sure.
And for people who might be looking at this as a potential real estate investment, what does that look like?
Well, there's a lot of investors in this space. There's public companies, there's big organizations such as Brookfield and Blackstone, very, very big investors in the data center space. Large number of private equity investors in the space. There's estimated $85 billion of new investment just in the United States alone for new data centers in the next 5 years. A doubling of space. meaning 15 to 20% growth in investment for the next few years, and users are saying we need it. There's many users that have said the risk of underinvesting in data centers is higher than the risk in overinvesting, meaning these big users want to spend more money because of competitive issues, and they're fearful of spending less money on data centers. So the big platforms, the big investment firms are raising capital globally to invest in space, and what benefits them right now is that because space is so dear, they have ability to charge higher rents. And where tenants in the past leased 10 or 15 megawatts of capacity within a data center, they're now leasing 3 or 4 times that, if not hundreds of thousands of megawatt capacity in a data center. So in kind of traditional real estate jargon, it's a landlord's market, not a tenant's market now, in terms of rents being charged, and the supply of space is less than the demand for space. So it's a very interesting environment for investors to look.
And when we're talking about data centers, it's quite different from, say, setting up a shopping mall or a retail outlet. And if we're talking about updating a data center versus perhaps starting a new data center, give us an understanding of some of the infrastructure development, and if we're talking upgrading, what that actually looks like.
Very much. So the estimates for the recurring spending in an existing data center is 20 to 30% of revenue, versus a retail store. You might not spend much money except fix the parking lot or the roof every now and again. So the technological advancement in data center is continuously expanding as the users are expanding their tech footprint. So security protocols, climate control, and most recently protecting greenhouse gas emissions because of all the power generation and the heat creation. So all of those investments are being made and require continuous reinvestment. So to put it into dollars terms, a traditional industrial building in today's world, depending upon the location, could cost $100 to $200 a square foot to build new. A data center would cost something like $1,200 a square foot, 6 times the investment per square foot to build it, and then the recurring capital costs, again, would be maybe 20 to 30% of revenue for a data center, versus the industrial building. Every few years, you reskin the property or you fix the parking lot. So the investment spend on data centers to keep it technologically current is much, much higher. And it also goes to keeping current on property innovation. So very, very important dynamic in investing in data centers is the recurring capital charges.
I think it's very helpful for you to paint that picture by comparing the differences when we're looking at a data center versus, say, an industrial space or even a retail space.
Sure.
So that does bring me to my next question. Give us an understanding of what some of the restrictions are when it comes to supply.
Sure. Power. First and foremost, power. Utilities are stretched. They've got limited capacity. And to build a data center, one needs to say to its tenancy, every second, every minute, every hour, every day, every week, every month, every year, you'll have power. And you'll have enough power. And then the question is, how much power is available for that data center, which will determine what types of tenants can use it. And of course, that's a very, very important dynamic. And with such limited, as you mentioned before, power creation and generation today, it's a very difficult impediment to start a new building. So first and foremost, power availability and power delivery is one. And then two, the location of it, because communities are averse to development in general, especially data centers, which are high-tech power generation, creating a lot of heat, creating a lot of energy, and people just don't want those sorts of properties right in their backyard. So the impediments to supply are significant, which means that the supply in place today and the ability to create new product is very, very valuable.
And I know that we're supposed to be focusing on data centers today, but it also made me think about potential comparables when we're talking about real estate. So when we're looking at biotech or healthcare facilities, we know that at the beginning of the pandemic, of course, there was a demand for this, and we've seen that wane this year. But also when we compare, say, data centers versus biotech research facilities, what would you say are some of the similarities and some of the differences?
Sure, it's a great question, and it's right on point. So what's happening today, I'll just compare the data center dynamic with life sciences dynamic. Life sciences has been growing tremendously. The ability to create a life science property is very different than a traditional office property. Much higher finish, lab space, the ability to have very significant investment and reinvestment. So a traditional lab science office building might also be $1,200 a square foot versus maybe $300 or $400 or $500 a square foot for a traditional office building. Much more specialized. And what's happened in the life sciences space is that there's been such voracious growth over the last several years because of biotech and new gene formation and all kinds of investing, that space got overbuilt. And during the last few years, where venture capital pulled back because of higher interest rates, that market got soft. And now occupancies of 96, 97% have gone to 90 to 91%. You've had some new development still empty, looking to be filled. So that's a soft market. Compare that to the data center marketplace, where you have similar high finish, high cost per square foot real estate, very customized real estate. For now, though, demand is still in excess of supply. Investment in AI, investment in data storage. Think of all the billions of TikTok videos and Facebook videos being created every single day. That has to be stored somewhere. So the storage requirement, the data delivery requirement is still there. We're going to see a massive growth in supply of data centers in the future, pending power capabilities. So for the time being, the data center marketplace will remain strong and stronger than the life sciences space, but there is a risk of oversupply down the road if we see overbuilding.
Well, that will be something to watch in terms of oversupply, but that does bring me to my next question, and this is in regards to capital. So in terms of some of the headline stories that I've been paying attention to, Bitcoin mining turned AI data center developer Crusoe Energy, so this is what we were talking about before the show, they secured a financing deal with Blue Owl Capital to construct a 200 megawatt site in Texas, and reportedly for use by OpenAI. And there are media reports that Oracle will also use the infrastructure to provide GPU capacity for Microsoft and OpenAI. So we're hearing about all these investments taking place. In terms of what you're seeing and what you've been hearing based on your conversations with stakeholders, do you have an idea of what we can expect, not just this year or the coming year, but also in the medium and long term?
Sure. So the markets for capital being applied to data centers have grown. So you have the asset-backed securities marketplace, basically financing leases, is growing $6, $7, $8 billion a year. So this year alone, there's been $7 billion of financings in the asset-backed marketplace for data centers. Last year, there was $6 billion for the entire year. So we've already exceeded that. You have the CMBS marketplace, raising capital for data center providers. Then you've got public companies investing in the space. They have access to unsecured debt, raising equity, and then you've got substantial private equity investors such as Blackstone, investing, and Brookfield and some others, investing billions and billions of dollars from their private equity funds. And then, of course, more boutique private equity investors who are solely focused in the data center space, raising capital. So the capital formation is substantial. It's several $1 billion a year, and one would expect that over the course of the next several years, you're going to see $50 to $100 billion of investment across these different capital markets invested in this data center space. Some fixed income, more higher security, higher end investing at the bond side, and then you'll have equity investments as well looking for higher returns.
And based on your perspective, you have been through many different cycles when it comes to real estate. So are there any concerns?
Sure. Arguably the biggest concern is obsolescence. Because we are in a world where technological investing continues and it's a parabolic growth rate, maybe a data center with a $1,200 per square foot cost basis, and maybe it's now $1,500 after reinvestment, is not up to snuff anymore. And now there's an obsolescence to that property because there's a new technology or there's a new footprint required that this box just cannot handle, and it has to be converted to a more traditional industrial building at 1/6 the value. So the obsolescence issue and risk to a data center investment is arguably the biggest risk that one can have. Arguably the next risk would be a lack of access to power. If all of a sudden the power source that was fueling the data center is no longer there or no longer can deliver what's promised, users are leaving and going to a different source. So the two biggest risks to data center investment are obsolescence, to make sure that they are current and fresh and can access the users that are consistently growing and becoming more sophisticated, and then of course the data resource.
And Larry, you do bring up some obvious concerns there, but when we're talking about contingencies, especially for data centers, I think it's very important to highlight those concerns. So when you're talking about obsolescence, can you expand on that in terms of risk?
Sure, by all means. So in the case of, as an example, here in New York City, you have a dispersion of performance within the office market in New York City, where the Park Avenue corridor rents are going for over $200 a square foot, and you can't find space. If you go several avenues east or west, landlords are giving away space at cost, and their buildings are older and can't meet the current user requirements, such as floor-to-ceiling windows and more efficient use of energy. So the same would hold true for a data center, where a data center could be very well located in the DC marketplace and have such demand where it's going to continuously generate premium rents and continuously have a line of users looking to occupy the space, versus a more bespoke data center in suburban Dallas, maybe with open land, and maybe it's a footprint that isn't technologically current and wasn't reinvested upon with current climate control and power usage and security protocols. Users will find other sources for their space. So location, reinvestment, remaining current is all very important, and the downside to a data center where the expense is so high is certainly much greater than, say, the downside to a traditional apartment building or shopping center, where you're not spending as much upfront per square foot, and the downside to recycle that square footage to something else would be less so.
And Larry, finally, I do want to ask you a question about security, because when we're talking about data centers and real estate, we're talking about physical space, but in an industry such as data security, we think about all the organizations that rely on these data centers. So, for example, the New York Stock Exchange, their parent company ICE, or Google, OpenAI. With data comes a lot of privacy issues, as well as personal information or even proprietary data and technology there. So it doesn't have to be physical security, but in addition to physical security, you need other security when it comes to data. So from someone who's been watching real estate, has been invested in it, what do you think are some innovations to keep your eyes on?
Sure, by all means. So as an example, we have a data center for our space, and I used to work at Credit Suisse many years ago, and to get into our space, we would have a key card to physically go into a dedicated space that was for us, and that was the others were precluded to come into our space. Well, in the data marketplace, you don't have a key card to walk in and have others not be able to get into. So you need very sophisticated firewalls, IT firewalls, to make sure that all data is protected and private and secure. And the data center providers generally are not in that business. So that security protocol for the data and the data security are the responsibility of the users within a data center. So particular firewalls and anti-penetration tests are all very important for users of the space, and that's really up to the user to provide for themselves. The data center users generally are responsible for that, not so much the data center owners.
Okay, Larry, well, thank you so much for joining me here. I think it was such an insightful discussion on data centers, so thank you for all of your insights today.
Thank you so much for the opportunity.
My pleasure. And that will do it for Global Money Talk live from the New York Stock Exchange. We're so excited to bring you daily coverage here on Sampro TV. You can check out the show anytime on our YouTube channel by searching Global Money Talk. Thank you for joining us. We'll be back bright and early tomorrow morning. Have a great day.